In this video, I'm going to show you how you can have $792,000 in tax-free income using a backdoor Roth IRA conversion. If you're a business owner or non-business owner, this video will work for you. So stay tuned, watch, learn, and the best thing, after you watch this video, you can actually start implementing this strategy right away in your life. Ready? Let's get going. Hey, thanks so much for watching this video on my YouTube channel. My name is Boris Musheyev. I'm a CPA and a tax strategist. Every week, I release a tax strategy video here on YouTube. For you, the profitable business owner, my goal is to completely simplify this tax strategy so that you can understand it. At the same time, you're able to go ahead and implement this tax strategy, or at least take it to your accountant so he can implement it for you. But if you don't have a tax advisor, you gotta get yourself a tax advisor. So these tax strategies could be implemented for you in your business. Thank you so much. Don't forget to subscribe if you love the video. Let's go ahead and start saving you money on taxes. All right, awesome. Let's get started on this tax strategy. By the way, if this is the first time you being on my channel, my name is Boris Musheyev. I'm a CPA and a tax strategist, and I help business owners save tons of money on taxes. But not only, I help them find ways to have tax-free income in the future. This is one of those tax strategies, so to speak. So let's dive right into it. So before we get into it, how can you build tax-free income? In this example, we're going to use how you can build $792,000 in tax-free income having a backdoor Roth IRA. We really need to understand what is a Roth IRA and how does the backdoor work. Okay, now we're going to focus on two types of individual retirement accounts. This has nothing to do with your business. Okay, traditional IRA and Roth IRA. If you are a business owner and you have a 401k, a solo 401k, a SEP IRA, simple IRA, doesn't matter. If you've got some retirement account for the business, phenomenal. Continue using it. You can still use the backdoor Roth IRA to grow tax-free income. Now, let's understand what is backdoor Roth IRA. Before we understand backdoor Roth IRA, let's break it down into two individual retirement accounts. We've got traditional IRA and we've got Roth IRA. There are some differences between them, and it's really, really important to understand them. Traditional IRA, you put money into an individual retirement account and you get a tax deduction. Because you get a tax deduction, IRS says when you retire, you're going to pay us income tax on it. Okay, Roth IRA, it's after tax dollars. You don't get a tax deduction for contributing to Roth IRA. So when you do retire, whatever money was earned in that account is completely tax-free. So again, traditional, you traditionally put the money in, you get a tax deduction, you pay tax on it when you retire. Roth IRA, non-traditional, put the money in, no tax deduction, and tax-free income when you retire. Now, to put money into traditional IRA, generally there are no income limits, meaning to say you can put the money into traditional IRA anytime, regardless of how much money you earn. Now, there are some limitations if you've got money of retirement account from your business or whatever that is. But the point that I'm trying to make, whether you have a retirement account or not, you're not prohibited from putting money into traditional IRA. Whether you're going to get a tax deduction or not, that's a different story outside of the focus of this video. But the point is, you're not prohibited to opening traditional IRA account, regardless of how much money you make, and putting money into that account. With the Roth IRA, you're actually prohibited to directly contributing money to Roth IRA if your income limits exceed thresholds. So if you're a single individual, your income is more than $161,000, you're prohibited from putting money directly into Roth IRA. Or if you're a married individual with $243,000, you're prohibited from putting money directly into the Roth IRA. That's why we have a backdoor Roth conversion. That means we're prohibited directly putting money into the Roth IRA because we exceed our income limit, but we're not prohibited from putting money into a traditional IRA. Doesn't matter what the income limit is, because with traditional IRA, you can put the money in. And then we have this amazing tax law and the code that says you can do what's called backdoor Roth conversion. From the back door, you can go ahead and convert it to Roth IRA because that conversion has no income limits. Doesn't matter how much money you make, and you're contributing it to a Roth IRA. We're going to talk about an example over here. But that is really what backdoor Roth is. And the reason why it's called backdoor and why it works because again, you're prohibited putting money into traditional, but you're not prohibited, excuse me, vice versa. You're not prohibited into traditional, but prohibited into Roth. So we put the money into traditional and convert it to Roth IRA. How much can you put away annually? $7,000. And if you are over the age of 50, you can put away $8,000 and do what's called a catch-up contribution. So these limits are for both traditional and Roth IRA. Let's talk about a practical example, how to do this, how to do it in a financial institution that you're working with, how it's going to work, how it's going to grow tax-free income right after this break. Hey, thank you so much for watching my video so far. I wanted to give you a heads up. I've got this free PDF, 7 tax write-offs that every S-corporation business owner must know. The link to this free PDF is down below in the description. So to make sure to download it, that's it. Now let's get back to the video. All right, awesome. Let's get started. By the way, if you have not been using this strategy, which is backdoor Roth IRA, up until this point, please definitely speak to your tax advisor. Be like, hey, I just want to make sure I'm doing it right. There's no tax implications, even though Boris on his video said this is good to go. I want to confirm with you, can we do this? Definitely implement this right after watching this video. And if you've got a tax preparer that just puts the right numbers in the right boxes, you don't have a real tax advisor, please do yourself a favor, do your financials a favor, get yourself a tax advisor. Now let's go into this example right here. So how does this work? You're like, all right, Boris, great. I want to use this strategy. I'm definitely over the income thresholds. What do I need to do next? Now, what you need to do next is open up 2 accounts. You need to open a traditional IRA and you need to open a Roth IRA. Now, there's a lot of financial institutions that let you do that. You can open both. Some financial institutions charge you money, some of them don't. It's up to you who you choose. But all financial institutions have an option in their app, on the phone, or on the online platform to open both and do a Roth conversion. It's a very famous thing. This is not like something that was just created yesterday, okay? Open traditional account. Let's say you are within the income limits or over the income limits, excuse me. Go ahead and put the money into traditional IRA. And then convert that traditional IRA, do a Roth IRA conversion and transfer it $7,000 to Roth. You might say, Boris, am I going to pay tax on that conversion? Because a lot of people ask me that, Boris, aren't I going to pay tax? The answer is no, because let's say right now in a year 2025, you put $7,000 in, you don't get a tax deduction, okay, because you didn't even file your taxes yet and you're converting it right away. So you never paid taxes on it, so you're not going to pay taxes on the conversion. You're doing it with the same year. Now, in the situations where you are going to pay tax is that, let's say you had traditional IRA all these years, you have $100,000 in there, and you're like, you know what? I want to have a tax-free income in the future from this $100,000. I am going to convert what I already had before this year into a Roth IRA. On that conversion, you're going to pay tax. Why? Because when you were putting the money into the traditional IRA originally in the past, you were getting a tax deduction. So that's why you would pay tax on that. But in our scenario, we're doing it for the same tax year. $7,000 to traditional, backdoor Roth conversion to a Roth IRA. Now, if we go through an example, let's say you do this for 30 years. So a 30-year-old business owner, you do it for the next 30 years until your age of 60, $7,000 for yourself, okay? And $7,000 for your spouse if your spouse works in the business, okay? So we're just going to use one individual in this case. 30 years, $7,000 a year. Assume 8% earnings annually. Now, that has been like the average market rate, I think, right? Like on a very conservative side. So we're just going to use 8% compounded annually. In 30 years, it's going to turn into $792,000. Now, whether you are a non-business owner or business owner, if you do backdoor, don't do backdoor Roth, but just contributing money into Roth IRA for the next 30 years, $7,000 a year, it's going to turn at 8%, $792,000. Out of the $792,000, only $210,000 was your original contribution from your own money, and $582,000 was earned tax-free. Now, if you do this for yourself, $582,000 in tax-free, plus the $210,000, of course, then you can do this for your spouse. That's another $792,000. I also have a video of how you can do it for your children. That's another tax-free income. You can absolutely use Roth IRA to your advantage. Make sure that you're speaking to your tax advisor, looking at wide variety of options, putting money away into retirement, getting a tax deduction, but at the same time, having a retirement account for which you will not pay taxes on when the money that you pull out at retirement. Definitely speak to your tax advisor. Thank you so much for watching this video, and I hope this was helpful.